Welcome back to the deep dive. We've got this really interesting high stakes weather briefing a listener sent over. It's the GW2Energy Weekly U.S. Weather Forecast, dated October 27, 2025. And yeah, this isn't your average local weather hit. It's packed with aggregated intelligence, really designed for those big decisions in energy, hospitality sectors where weather means millions. So our mission today is, well, let's cut through it. We're going to peel back the layers on this document, find that truly actionable knowledge for the next 3 weeks. We're talking the 7-day, 14-day, and 21-day intervals. That takes us right through November 17th, and it's all based on NOAA data, but processed through their models, translating probabilities into, well, operational risk.
Exactly, and that's where we need to zero in, really focus on what matters to you, the operator listening in. This forecast is hunting for what we call thermal outliers. Those specific weather conditions that just immediately spike your utility loads. It's not just about, say, heavy rain. We're looking for the big swings. Highs cracking 95 degrees Fahrenheit, lows plunging below 40, or, and this is key, any temperature anomaly that's 15 degrees or more off the seasonal norm, that 15-degree deviation, that's the highest alert trigger because, well, it forces emergency HVAC use. It can ruin perishable goods stuck in transit, and it totally changes how you need to manage your staff, your labor deployment.
That's the real tension, isn't it? That operational shift. So, what's the big story shaping up over these next 3 weeks? Are we looking at a nice, gentle slide into winter, or is it going to be more turbulent? Let's walk through the immediate risks: tropical storms, tornadoes, and that really crucial temperature battle. We'll start with the immediate 7-day forecast, October 28th through November 3rd. The immediate week, 7-day forecast, October 28th, November 3. All right, kicking off this first week, the big headline is Hurricane Melissa. Currently a Category 5. I mean, that's a catastrophic system right there. Just the name and category demand attention.
Oh, absolutely. You see Cat 5, you pay attention.
Yeah.
But the forecast does offer some comfort for U.S. mainland operators. Yeah. Despite Melissa's sheer power, the critical detail here is the low U.S. mainland threat. The probability of landfall, it's actually less than 10%.
Less than 10%. Okay.
Yeah. But, you can't just ignore a storm that big. If your operations rely on supply chains moving through the Caribbean or maybe Gulf staging areas, Melissa's presence alone still creates risk. Insurance issues, delays, you'll need rerouting, that's definite. The slightly better news, though, for this first week, the source confirms no other active tropical systems are expected right behind it.
Okay, so one major storm to watch offshore, but relatively quiet otherwise tropically. What about inland? Severe weather across the U.S. interior. Tornadoes.
Also pretty minimal, actually. We're looking at almost negligible tornado potential for this week.
Negligible, okay.
Yeah, the risk level's really low. Marginal, isolated risks, maybe a 5% probability, mostly in the Central Plains.
5%.
Right, so when you see 5%, that's basically telling you this isn't something you need to change schedules for or, redeploy major resources. It's more like confirmation the atmosphere is pretty stable for the next week.
Think like the Denver area.
Yeah.
Risk is there, but very contained. Got it. But the real money, especially at end of October, start in November, it's always in those thermal shifts, the temperatures. What's the story there for week 1?
The story is really summer hanging on in the south. The overall U.S. pattern is mild, but it's the split you need to plan for. Down south, there's a 40% chance, a pretty decent likelihood, of seeing above normal temperatures.
40%.
Yeah, take Dallas, for instance. Highs projected near 80 degrees Fahrenheit. That's like 5 to 10 degrees above average for this time of year.
Wait a minute. 80 degrees in Dallas at the start of November. If you're running restaurants, hospitality, that's not just about the utility bill. That's a payroll decision, right?
Yeah.
Affects staffing for outdoor seating.
Precisely. That's the operational impact. If you run a restaurant chain, you are probably planning to wind down outdoor seating maintenance, maybe switch inventory to hardier winter-type menus. This sustained warmth. It means you're basically stuck extending those costly summer operations another week. You need the staff, you've got higher spoilage risk for goods maybe not packed for those warmer truck temps.
Right. Okay, so that's the south. What about the north?
So contrasting that with the north, we do see those cold dips starting to approach that critical 40-degree Fahrenheit line we talked about.
Yeah.
About a 30% chance focused on cities like, say, Minneapolis.
Okay.
But here's the key takeaway for this week, operationally speaking. It's about managing volatility, not catastrophe. No temperature deviations hitting that 15 degrees or greater mark. Our highest alert are expected anywhere in the U.S. in this immediate 7-day period.
So the cold is coming, a reminder of the season, but it's not breaking budgets just yet.
Not yet. It's manageable. 2, the midterm view, 14-day forecast, October 28, November 10th.
Okay, let's push out now to the 14-day window. This takes us through mid-November, tropically. Sounds like things quiet down.
Yeah, we're moving into a quieter phase, generally. But the threat doesn't totally vanish. Still looking at maybe a 20% chance of new formations popping up.
20% and U.S. exposure.
Ticks up just slightly, maybe 10% risk for the U.S. mainland, primarily targeting the southeast. Think Miami area, perhaps.
Oh.
But really, that small increase in formation risk, it's just the long tail of the hurricane season winding down. You can't completely drop your guard. But your focus, it should probably be shifting inland now. Because the temperature story, that's really getting well entrenched.
Right. And sticking inland, what about those other risks? Tornado probability was negligible in week 1. Does that change here?
It bumps up a tiny bit, still minimal scattered risk, but maybe rising to about 10% likelihood across the Mississippi Valley.
10% Mississippi Valley.
Yeah. Now, for a major energy distributor or, say, a big agricultural operation there, 10% is still low probability overall. But it's maybe just high enough to warrant a quick checklist review. Is it worth changing major plans for? Probably not yet.
So more of an elevated watch and wait status than immediate action.
Exactly. It helps clarify what's just noise versus truly actionable risk.
Good distinction. Okay, let's dive back into those thermal extremes then, because you said that's where the money is really won or lost. Persistence is the word.
Absolute persistence, especially in the warmth. Above normal temperatures are now favored with a 50% likelihood across the south and the west.
50% now. Okay.
Yeah, so we're talking sustained warmth requiring continued cooling investment. Look at Phoenix, for example. Anomalies there could hit plus 10 degrees Fahrenheit.
Plus 10 in Phoenix in the second week of November.
Right. If Phoenix is looking at sustained maybe 90-degree heat that far into November, your HVAC teams are still on red alert. This isn't just leftover warmth anymore. It's like a prolonged summer. It drastically increases your baseline utility load for that whole region.
And while Phoenix is stuck on cooling, Chicago's definitely seeing the other side of the coin, right? Those cold dips below 40 degrees.
They're increasing, yeah. Up to a 40% chance now.
40%.
And that 40% chance in a major hub like Chicago. That signals a pretty significant energy strategy decision point. This is where energy providers start seriously hedging or scaling up their buying of natural gas, maybe heating oil. The North is now, officially transitioning to heating demands, while the South is still fully deep in cooling mode.
So it's like two different continents, operationally speaking.
Pretty much.
But crucially, even in this 14-day window, the source is still saying we're not hitting that extreme high alert 15-degree deviation threshold.
That's right. That consistent detail is really important. It means plan for increased operating costs because the seasons are extended or shifted. But you're not planning for, catastrophic system failure from truly unprecedented extreme weather. It's manageable volatility, not crisis mode yet.
Manageable volatility.
Yeah.
Got it. 3, the longer horizon, 21-day forecast, October 28, November 17. All right, now pushing out to the end of this forecast window, the full 21 days, up to November 17th. What's the seasonal taper doing to tropical risk by then?
The taper is finally really taking hold. Activity odds drop to about 30%, but the actual U.S. impact probability is only around 15%.
15% impact.
Yeah. And if anything does form this late, the risk seems to be targeting the Gulf. The forecast specifically mentions New Orleans. But this is, classic late season, probably smaller scale risk. Still a factor for coastal operators, though. Got to make sure late season inventory is secure.
Makes sense. And tornado risk, still pretty low.
Yeah, stays consistently low overall. Maybe 10 to 15% isolated chances scattered across the central U.S.
So the major story, still no surprise, is the temperature pattern, those persistent anomalies.
Yes. And for anyone doing longer range procurement, this 21-day outlook shows those sustained anomalies becoming, truly locked in. We're looking at a 50 to 60% likelihood of above normal temperatures just hanging on across the southern plains and the southwest.
To be to 60%.
Right. Think Texas seeing anomalies still around plus 5 to 7 degrees Fahrenheit, potentially for 3 weeks straight.
Wow. That really locks in the demand profile for power grids, doesn't it? And dictates inventory life cycles for perishables for the next month.
Exactly. That's the planning horizon it affects. And then, flip side, the North is really solidifying its cold pattern. Lows below 40 degrees Fahrenheit, now up to a 50% likelihood.
50% chance of sub-40 lows.
And the forecast even flags something interesting. Potential for significant cold, maybe negative 10 degree Fahrenheit anomalies up in the Northwest.
Whoa, negative 10 anomaly in the Northwest. That sounds like a major flag. How does that square with the overall low alert status we've been talking about, not hitting the 15-degree trigger?
That's an excellent question. It's about scale and location. While the Northwest might see a localized, pretty sharp cold snap, the critical detail that carries through the whole forecast period is this. Even with that potential pocket of extreme cold in the NW, the broader U.S. pattern, and specifically the major population centers relevant to this operational guidance, are still not forecasted to hit that system-wide extreme, that 15-degree deviation trigger.
Ah, okay. So prepare for much higher HVAC use regionally. Definitely switch maintenance focus to heating systems up there.
Absolute.
But still no need for like a maximum emergency declaration based on this forecast's criteria.
Precisely. It's about understanding the nuances of the alert levels. 4, synthesis and actionable guidance. So, okay, let's pull it all together. Synthesize these 3 weeks for the operational teams listening. The key thermal challenge, it's really that sustained, prolonged summer feel in the south and west.
Yeah.
That demands continued energy for cooling. It delays seasonal menu changes, maybe stresses labor that was really expecting a break by now.
Right.
And then at the same time, the north faces this steadily increasing frequency of cold dips below 40 degrees. That accelerates the need for heating fuel procurements, don't gas, especially as we get closer to mid-November.
So it's really managing that transition and the stark regional differences. That's the core insight here. Which leads us right to the specific advice given in the source material itself. For those of you running operational models, the guidance seems pretty clear. Leverage platforms like GWT2Energy's own to meticulously track those subtle shifts, especially the shifts in heating demands as that cooler air systematically pushes further north.
It really is about front-running that inevitable shift, isn't it? If your planning models are only focused on the South's high cooling load right now, you're missing that crucial window, missing the chance to procure heating resources efficiently for the North before the full demand really slams in late November. The data's telling you to shift your capital focus now.
Right. It's the difference between just reacting to the first real cold snap versus actually managing the seasonal transition within budget. That makes perfect sense. Outro. Okay, so to quickly summarize our deep dive into this GWT2 energy forecast, the next 3 weeks seem defined by, well, the financial strain of that persistent southern warmth, a clear, monitored shift towards managing heating demand in the north, and, thankfully, a reassuring taper in the overall tropical risk after Hurricane Melissa moves further out.
And we absolutely have to conclude by circling back to maybe the most critical operational detail buried in the fine print of the entire document, the inherent fragility, the uncertainty of these longer-term forecasts. This overview, as the document itself explicitly states, it's compiled from public data mainly for informational intent. It's not certified forecasting.
Right.
Patterns can and do shift swiftly. And the advisory is very clear. It insists you, the user, must cross-reference NOAA, the National Weather Service, the Storm Prediction Center for timely, real-time warnings.
Always check the official sources for immediate action.
Which brings us to that final question, something for you to really consider as you make these high-stakes, potentially multi-million-dollar plans based on forecasts like this. If a proprietary, highly detailed advisory like this one explicitly disavows liability for how you use it for any losses incurred, and it demands that you consult official government agencies for the real-time actionable warnings, what does that really tell you about the true limitations of aggregated intelligence versus official alerts? How should you balance the strategic insights you get from proprietary models against the immediate, maybe legally crucial warnings from federal agencies when you're making those critical real-time operational calls? Because navigating that margin, that could be the difference between a successful season and, well, a catastrophic one.